Now we are going to have our next presenter from StoneStep Myanmar ASB. Before I invite him, please allow me to share the biography of Mr. Jonathan Hilliam. Jonathan Hilliam is a Myanmar-based economics and communications professional and a specialist in emerging market, financial services, research, and insurance. With experience across 3 continents, he is now serving as a partnerships at StoneStep Myanmar. I would like to invite Mr. Jonathan Hilliam to provide his sharing of digital microinsurance in Myanmar.
Perfect. Thanks for the introduction, and I hope you're all having a nice Thursday. I want to thank FinTechs and Musoni, particularly Ian Cameron, for putting this together. I think it's really great that the market can kind of come together like this in a difficult time, and there's been some really valuable topics discussed today, so far especially. So in this short presentation, I'll discuss quickly the case for insurance in Myanmar, and hopefully by the end, I'll have conveyed why it's a significant potential avenue for business for MFIs, why it's effective for customer retention, stickiness, also KYC, and also why the real social benefits are great for the population segments that we serve. So I'll begin by introducing StoneStep Myanmar, moving swiftly on to an update about where insurance stands in the market. It's been an interesting 12 months, and the next 12 months, we can expect more of the same. Following on, we'll get into the role of technology a little bit and how integrations between fintech platforms can work, and in our case, do work, as I'll be using StoneStep as the example. And then last, we'll explore how insurance can bolster company objectives, what challenges there are, and where we're at policy-wise in Myanmar at the moment. So on to StoneStep. So we're headquartered in Switzerland and are a financial services technology firm focused on innovating and supplying small-scale insurance products for low and middle-income population segments. In Myanmar, we're partnered with Dinar Facility, which is a UK aid-funded program that focuses on growing the private sector. And we work meaningfully together to increase financial inclusion and change how insurance is presented and delivered to first-generation insurance customers. So what we provide, much like Microfinance, is financial security. No more borrowing from extended family to pay for debt, no more grey market loans, pawning belongings, more liquid savings, less worry, fewer consequences. And the way that StoneStep does this is by essentially acting as a digitizer for insurance companies and then enabling these products for what we call the distribution partner, which in this case would be an MFI. The MFI would have direct access to a customer base. And so we organize white label digitizing products. We design the products working together with an MFI, and then we also manage the program. So this means that our partners' branding is visible, not ours, but we deliver the program behind the scenes. So let's talk insurance. So, sorry, that's moving a little bit slowly. Let's go on. So if we take a step back, you can see where the sector stands in relation to some of our neighbors and comparable countries. And so this graph plots the insurance penetration in the market against the GDP of the country. So although you can see Myanmar at the bottom left is currently behind Laos and Cambodia, we are currently undergoing quite a fast liberalization agenda. And so I think if I show you this chart in a few years, maybe we're all doing another meeting in a few years, expect it to be wildly different. So in fact, EY recently has noted that it expects penetration to reach 1.39% by 2028. And so on this graph, that would have us in between whereabouts Cambodia and the Philippines are now. So this is good news. What is not good news, but does show the harsh necessity for insurance, is this next graph, which illustrates the market's combined reaction to SARS, MERS, and swine flu. So I'm just checking that it's moved on. I think it'll do it in a sec. But what we can see from this graph, that I'm not sure if it's come up yet, is that after a pandemic or an epidemic event, there's a huge uptick in demand for products, here we are, that protect people against the externalities of epidemics and pandemics. So when people see the reality of what can happen, that we all see in the streets, every day, protection against an event that was, until that point, just a possibility or something that might happen, suddenly becomes vital. And so we don't have broad industry-wide data for how COVID has changed this, but anecdotally speaking to players throughout the market, the same does seem to be true. So times are tough, and when they're tough, insurance is there to help. What we do have is some proprietary research that StoneStep has taken out, has undertaken, and let me introduce you to that because I'm going to draw on it a little bit today. So we surveyed over 500 people, and we used a mixed methodology of online and telephone, and managed to achieve a fairly mixed geographic and age sample. But as you might expect, the data leans slightly towards Yangon and Mandalay, and also people under the age of 45. So before being asked about insurance or other services, respondents were explained exactly what insurance was. So they had a little bit of information going into answering the questions. And so my slides are being a little bit slow to update, but I can talk through a little bit. And so what we found, interestingly, was that 66%, and this is very high, were willing to purchase insurance. And so that was done in October, so just a few months ago. And you can see the graph on the right that talks about compound growth and market penetration. And so this was done pre-COVID, and the growth estimation was something like 0.12% a year. And so, COVID has clearly made a big issue, and it's put something like insurance in the right at the fore of people's minds. But what are the barriers? The barriers are plenty in Myanmar. But let's say for those of us who are kind of sitting here, we might not often feel absolutely compelled to go out and buy insurance, but we know why it's a good thing, and it's very important to live a stable life and a smart life, and not get into problems that can interrupt anything from health to business to family to environment. And so the main barriers that we found in Myanmar are 36% said they cannot afford it. We've got 22% saying that there's a poor availability of accessibility of being able to find insurance. And then 19% said that they didn't have a good enough understanding of it to make the commitment. And so this is the top 77% of why people do not buy coverage. I think it's important to note that insufficient benefits is sitting at just 8%, and even more importantly, lack of trust, which is something that financial services really takes a hit on in Myanmar, is at just 3% for insurance, probably because it's so new. So what does this show us? I think this shows us that the barriers to growth are largely economic, geographic, and technical. But what we think at StoneStep is that these problems can be solved, and so that's what we're doing, and that's what we've done. The answer to this, I think, are premiums need to be lower, simple technology needs to help distribute access, and proven educational materials and techniques need to be deployed. And the next slide, when it comes up for you guys, is going to discuss external shocks. And so you can define as an external shock as something like an unexpected health event, or a sudden loss of business for maybe an SME, or fire, drought, and so on. And so how do people finance these external shocks? And I expect this slide will be particularly interesting to all the microfinanciers in the room. However, please forgive us for grouping together MFIs and money lenders. At the time we undertook the survey, that was a way for us to kind of conveniently categorize. But in the context now, I would say we don't view them as the same thing. So I'm not going to run through everyone, but what we can see is that the top choices here either deplete liquidity or can often contribute to taking on bad debt. And I think it's very important, Myanmar reliance on one's social circle to finance external shocks is very high. And this can have, terrible consequences across generations, but also for wider communities that are, in the kind of financial bubble that they live. You might see that insurance is just at 1.4%. And this is quite surprising because although at the bottom, it's notably higher than the penetration rate. And we expect this is an uptick due to COVID-19. So that's briefly where the market stands. And if you want to have an insight into that full report, please send me an email or reach out on LinkedIn. My email address will be at the end, and I can send you over the full report of all the other data in it as well. And so what do we kind of know from that? We know that insurance is not well established, but there is demand. So what's happening to remedy this? So last year, in 2019, 5 foreign standalone insurers entered the market, and then there were also 6 JVs, JVing with local insurers. And this has been a great thing for the country. It increases awareness, supports the capital markets, but it primarily helps out the middle and upper classes, which is, not why we're here today. It often leaves the less wealthy and more subsistence populations without protection. And this is due to the larger size and cost of policies. And so I put some examples here of small ticket items. And these small ticket items, or the reason they're small, I should say, is that they're driven by having a lower price and the consumer preference of, let's say, doing more often and in smaller quantities. So if you want to top up your phone, you might get a prepaid card for 2,000 chat, but you're less likely to pay for the whole month in advance. And so the model of a lot of insurers, the majority of insurers in Myanmar at the moment isn't necessarily an exact fit for the market, and especially not our market. And that's because they only target a small section of it. So let's see what technology can do about this. That's why we're here today, a bit of technology. So targeted purpose-built software has the ability to cut up large premiums and spread them into much smaller, manageable, and attractive chunks. Sorry, I can see my slides darting around a little bit there. I think it needs to load them. So yeah, it can cut it up into different size chunks, more manageable, more attractive. And so this can go down from an annual premium to a monthly, weekly, or even daily payment. And so the right software can also put the availability of insurance into the hands of those who need it. And so this might be through an app. It might be through an app wielded by an agent who is frontline and talking to borrowers and savers. And technology can also teach, it can explain, it can answer questions. So if you cast your mind back to the data on barriers to adoption a few slides back, this is what we're talking about here. This is how technology can beat those big three, 77% of the barriers to adoption. And this is what StoneStep does. We utilize our purpose-built high-volume transaction software, which we've called Eiger, after the mountain in Switzerland. We're Swiss after all. And what this can do is create access to insurance for every citizen of Myanmar. And we can do 2 million transactions a day, and we cover the full user journey end to end. From tapping it on the phone, speaking to an agent who taps it on their phone, all the way to the back end with claims processing and such. And so in terms of the customer journey, I think it's really important to go into it a little bit. The customer journey is clean and simple by design. And whether it's done directly or via an agent, we ensure that registration in over 90% of cases is instant. There's some difference if you're talking about health, because if you're over a certain age, we will require documentation, but the large majority of people will be able to kind of click and get, I guess you can say. So technology and the flexibility it grants us also allows us to bring products to market in quite innovative ways. And so we call this bundling, and it works by combining products into a whole, not just insurance products, a wide variety. And this whole kind of speaks to the whole problem, the wider problem, and it solves it from different angles. So in insurance, we've got a very popular saying that insurance is sold. It's not bought. People don't wake up in the morning and go, let's buy insurance, woohoo, what an exciting day. That doesn't undermine the value of insurance, but it does sometimes explain the lack of, urgency and immediacy. So bundling tackles this problem, and it does it by creating a tangible value for first generation buyers. So let's take COVID-19. So you can combine a health insurance product that has COVID-19 financial cover and bundle it with, for example, telemedicine services that, if any issues come up, before, or perhaps if you contracted COVID, you would be able to kind of call up an unlimited amount of times to a doctor and have them walk you through the journey with you. And let's take savings and loans, for example. So more than just being complementary products, bundling can help encourage positive consumer behavior. It can also, for example, if you're doing savings, do you want a customer to keep over a lakh in savings at all time? Insurance can, kind of help encourage this behavior by perhaps kicking in after 2 consecutive months with coverage remaining until they perhaps go under 1 lakh. And so it's a way to kind of achieve achieve objectives within the business, but also encourage responsible financial behavior. So this is what we do in other markets, and this is a process that's underway in Myanmar at the moment. So how does it work? This table, gives us an insight into how the integration works and the role of a distribution channel, MFI, in Myanmar. So we're currently partnered, StoneStep is, with Microinsurance, which has been really great because it gives us immediate access to all insurance products on the market. And it also indicates that being state-owned, the government is genuinely on board with digital solutions and different ways of providing financial services. We can and will in the future partner with other insurers, because essentially what we do is provide the ability for insurers to seamlessly work with distribution channels such as MFIs and digitize this. So the core role of an MFI in this would be their customer access. And within this, there are some key points which are premiums collection and then also marketing due to the customer access. And so, we have a kind of linkage here where it starts off with the insurance company, and then in the middle, StoneStep does all the digitizing, the program management, the product creation, and then at the end we have the MFI that reaches the end user. So where are we at policy-wise? Insurance in general has been liberalizing at speed in Myanmar. It's been really great. The sector is now permitted to perform bank assurance, reinsurance, and new segments such as construction can now be insured. Regarding microinsurance and MFIs, the Bank Assurance Directive of March this year notes that MFIs can gain a corporate agency license, and there will be approvals for this from some of the stakeholders such as IBRB or MBSC, and will ultimately have the right to sell insurance. So this hasn't been quite fully fleshed out yet. COVID-19 has put brakes and reorganized priorities, but there still needs to be a little bit further agreement, I think, from how this agency license looks, but the wheels are in motion. And the movement of regulation in general can be seen of one that is formalizing. The market is formalizing very quickly. So it's away from perhaps more of a social welfare fund model and towards an integrated offering between insurers, technical service providers, and MFIs. So what does this mean? I think it means for now we've got to look into having a very specific approach about how collaboration happens in the market. But on the whole, we are, in a regulatory sense, in a digitizing sense, we're on the precipice, at the edge of large change happening. And so we're at the edge of very large benefits coming for the Myanmar population who are able to transfer risk out of their daily lives. And then also for MFIs as well, who will have another avenue of business and also be able to better serve their customers. It's kind of like a third pillar. You've got loans, you've got savings, and you've got insurance kind of going together. And so, now is the right time to have conversations about insurance in the MFI sector, with a view for, execution taking place in 2021. So lastly, I'll just kind of jump over some of the benefits. I hope it doesn't sound too salesy, but, we really believe in these, and, it's good to spell them out, as insurance isn't, much talked about, or at least it's on the process of being more talked about. And so microinsurance in general can improve customer stickiness, retention and loyalty. It's keeping people, within the MFI. And at the same time, it boosts KYC. So this speaks to managing credit risk and the ability to perform meaningful analytics, plan for the company, expand, and, roll out digitization. It can also act as a new revenue stream and increase the number and value of transactions, all while acting as, a big differentiator for a brand in the market. I think if you kind of, you speak to someone and they say, do I want to work with or do I want to, be a customer of the MFI that has X or X plus insurance, and the insurance could be bundled in an interesting way, I think probably if the price is right, insurance will win. It also, most importantly, has, real social benefits. We're talking about the genuine problems of today: COVID-19, crop failure, SME risk. It's a tough time for many people, and business aside, it's the most important thing is to kind of be able to deliver these social benefits that people around the world benefit from, but not much in Myanmar. It also helps the brand in that direction and achieve SDGs. So that's pretty much me done. Thank you very much for listening. Do reach out over email or LinkedIn if you want to hear more about the market. I can send over the consumer needs assessment, or if you want to explore more about how StoneStep can integrate with an MFI and what that would look like. It's quite hard to condense it into just 15 minutes, but hopefully I've given a good enough high level overview. So thank you very much.
Thank you, sir, for your valuable time and insights.